Welcome back to another video, guys. Hope you had a good trading week. Let's get straight into the charts, a quick short one. So let's recap first. Let's go back to the weekly. I did take a loss, by the way, so we'll go over that as well. Transparency and losses. So what do we see? First, monthly time frame, not much to look at because it's only been 7 days. So if I quickly just hide the drawings, we've just had really a small body, 7 days, so nothing much to really look at. We go to the weekly time frame, we can see that we've been ranging for 1, 2, 3, 4 weeks. We've just been going sideways in this area. Usually sideways movement in the weekly time frame usually indicates a reversal. Usually, this is not guaranteed, but usually. So you can see here you've got some sort of range. We have a drop, a range, a drop. This one we had a range, but then we had a push up. But generally you can see when you have a range, you have a turn of direction, a change of direction, range, turn of change of direction. You can see that everywhere. So wherever you usually go on the weekly time frame for a range, you'll be usually followed by a change of direction. Now, I'm hoping for this to be a change of a direction because, again, I'm still hoping for price to actually reverse and come back down to these weekly demand levels. But let's see if that actually is the case. We have to actually keep trading trading the trading plan, following the structure. I did take a stop because I did take a loss because I was expecting price to reverse. So I took an early, slightly riskier trade. But I got burnt on that one, but only 1% anyway, so it's nothing really to get scared about. We'll go over that later as well. So on the weekly, we've had the range. This was the previous major support level, which we look like we're just hovering above. But again, we have not cleared above this weekly high. If you can see where this alert is, where it says US 30 buys, this is the last weekly high, which pushed us down. Then had this retracement back up, and we failed to close above it 4 weeks in a row. This also gives me more reason that we may still drop back down to those demand levels. If we go to the daily time frame, just keeping the charts naked right now to keep it clean and simple. This is what I saw on the daily. I saw this push down, retracement, impulse down. The weekly, we've had this retracement through the days. Now, this is the area we're talking about, the 4 weeks we've been kind of ranging. Price came up and it met the previous weekly high. We then had a change of direction. We had a 1, 2, 3 reversal pattern, new lows. We've now had this retracement pattern. It's just retracing correctively. You can see it took 1, 2, 3, 4 days to reach this low. It's taken 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days to get back up to those highs. We could also see that maybe this wick high and this wick high was like a liquidity area. So we just sweep the liquidity and then roll back over. Again, this is all speculation. We don't know until next week and see if we push above or if we can roll back over. If we go back down to the 4 hourly, nice and sweet, same thing. Initially, I thought that the liquidity area was these two little highs. We then pushed above, came back down. So this is where I sold. These areas where I was thinking, okay, price should start to drop back down now because we had the monthly drop. We came back up to the monthly supply. We had the daily drop. We popped back up to the daily supply and the 4-hour supply. We reversed off that heavily with bearish intent. We then had corrective movement to the downside. We didn't create any newer lows. We came back up and we struggled to push back above these highs. Okay, we came back down to the 1-hour supply. Reversed off that heavily as well, rejected off that heavily. We've then pushed back above it. So this area could be the highs. We had some liquidity area. I'm sure lots of stops were in this area as well. My stop was actually just above here. I literally got wicked out and then it's reversed on me. But let's wait and see how next week plays out. So again, sometimes you can see where there's a manipulation, where you've had a trend like this, where you've had a slightly kind of a big bullish candle, small bullish candles followed by a slightly smaller bullish candle, a huge bear candle. Then suddenly you have a high volume bull candle. You can see that there's going to be resting liquidity over here. I actually took these buys in this areas, and I took this buys up to this level here, which is a successful trade. That's from last week. After we had this huge drop straight off the rejection of the 4-hour supply, this gave me a good reason why we should be popping back down given the higher time frame bias as well of a bearish move. So once we've had price come back up again, we have again slightly big volume retracement. We've had another big rejection, and then we had kind of hesitant bullish movement, and then we had this huge 4-hour candle. Sorry, there was about 2 hours in the New York session, and it took out all these highs. So again, yes, we could break above retest and continue up to bullish trends to new all-time highs. This is not something I see when Dow is moving with intent. You've had an impulse down, then you've had a slow retracement. We've created some liquidity zones, and then we've now come and taken out that liquidity area here. We've swept the highs, we've swept the stops out. So I'm hoping for the reversal. The following two candles didn't give me much confidence though, because this bear candle, the black one that you can see there, it would have been higher in volume, hopefully broken back below this area, and then continue down with the third candle, but it didn't. So again, we have to play this by ear. So let's go down to the 1 hour candle. So this is the initial liquidity I thought was being swept. We'll just highlight it, this little area here, because we had the 4 hour supply we took out, which is this yellow zone. We rushed off that away from the area. We then had this ranging. We then broke those highs, taking out the liquidity in this area that was being built up. Once we came back up to the 1 hour supply, I then took the sells because I assumed, we've taken the 1 hour sells. We should hopefully be, reversing from the area. So I took the sells. Then my stop was really large. It was just before New York, so it was around here. And my stops were all the way up here. I gave it a wide berth. And then targets, of course, were new lows. Doesn't matter. So this is where I was holding the trade. I held the trade through 2 or 3 days. Then it wicked me out. As you can see, we were in profit for a little bit, but we never got. Once I saw this big bear candle, let me just move that again. When I saw this big bear candle, it gave me, more energy for this trade, thinking, okay, yeah, we're going to go back up again. Nah, came back up, refused to continue back bearish. We pushed back down. We didn't break those lows again, pushed back up again. So following market structure, of course, we were still bullish technically because you've had, after this new low, we had this high, as you can see, matching this high. We then broke that high, tested the low, new high, pull back, new high. We had this pullback and it tested this low with one candle and it's reversed all the way back in. It's ranged, popped back up. So this is, of course, is an area. We've had then a new high, the retracement, created a new low, matched that same high, popped back down, and we've created a new high again, retesting the support level here, as you can see. So technically, of course, this is still bullish structure. There's nothing wrong with that. It's bullish structure. My trade was a little bit premature. Usually I would have actually waited for price to break the previous low and then I can get back into the trades. So I would have waited for this leg here. If we had done this break and then if it was maybe a bit further down and then we had the retracement back up, I would have looked to getting on sells like in this area, for example, then we can ride it back down because then it's bearish structure. But it was premature given the bias of the 1 hour supply, the 4 hour supply, the daily supply, the previous weekly highs. So I was looking at all of those factors and thought, I know if I don't get in quickly, US 30 has the habit of doing this. It will wick up, as you can see here, sweep liquidity, match a high, not break the high, and then it will wick back down and it won't give you any place to get back in the trade. You can see, look at all this volume that came in. Sells within 2 1 hour candles, and it just leaked from there. It didn't give any, break of the lows, and then a nice little retracement, a nice reversal pattern, and then we can continue it back down. It just went. And of course, when Dow is bearish, it moves fast, so keep this in mind. So that's why I took that premature trade. Yes, it's not normally my trading system. Usually I'm already trading with the trend. Okay, so even like, for example, this buy here that I took 2 weeks ago, which was my last video, I was trading with the trend. We're creating highs, higher lows, higher highs, higher lows, higher highs, and I took the buys up to this area here. So yes, it was a premature trade, burnt me a little bit, but nothing to be worried about. So now I'm just going to wait. So now I expect price to break below this red line here, which is the previous low. No more premature trades. Wait for the break, then the retest, and then we can hopefully see that that we've swept the liquidity. The break of that low will confirm we've switched directions and we can drop back down. We've also got to wait for volume switch. So as you can see in this most recent area, we've had much bigger bull candles and smaller bear candles, which was not the case here, which is why I took the premature trade, because we had big bull candles, small bear candles. The bull candles came back in, then they slowed back down and we had a big bear candle and bullish volume came back in. We couldn't break the highs. Then we started to get bigger bear candles and smaller bull candles, if you can see this. Then we had a huge bear candle and smaller bull candles with lower volume. Yep. So this is what was giving me the idea that we were going to continue back down. But of course, market structure doesn't lie. We didn't break this low. We just came, tested the previous high, the break, and then we just continue back up in bullish structure. So I'm not mad at the markets. You can never be. Market's always right. And the market takes no prisoners. So yeah, just keep that in mind, guys, for next week. I'm just waiting for the break below. If we do get an impulse back above these highs, then I'll know, okay, we've switched to bullish backup bullish structure for the all-time highs. So then I'll be waiting, just like this arrow shows, a break, a retest, and I'll take those sales back up. And then we'll see what happens. I mean, we have left all this volume up down here that we broke this high from. So price may pop back down again like this and then take off. Or what I'm really, really hoping for is for price to actually just reverse and do something like this and then just zoom down and just break those lows. That's what I'm really hoping for, because I really want this bias to play out. I've been waiting for about a month and a half now. So I really hope that that bias can play out and we can start taking out these lows and go back down to weekly lows. If not, we can break those highs and we can just start targeting highs again. Simple, nice, clean and easy, nothing too complicated. Again, join the free Telegram. I explain these things every day as we go along. Remember to like, share and subscribe and leave some comments. Ask me, if there's anything you want me to cover, if there's anything I explain that you don't really understand, give me some feedback so I can, of course, create better videos for you. See you next week, guys. Take care.